Good afternoon, everyone, and welcome to this executive briefing by the Global Interdependence Center. My name is Bill Kennedy. I serve as the Vice Chair of Programming for the GIC. And on behalf of my fellow board members and the GIC staff, I welcome all of you to our second virtual event in this series titled Analyzing Pandemics, Economic and Policy Impacts. Over the next few months, we're bringing together internationally recognized experts in infectious disease, immunology, vaccines, testing, healthcare policy, monetary and fiscal policy, and capital markets, really in an effort to help explain and explore the economic and policy impacts of this global pandemic. This is a practical, hands-on series, and the goal is to facilitate a thoughtful exchange of views and to bring timely information to help decision makers like yourself to better plan and prepare for uncertainties. For over 40 years, the Global Interdependence Center, a Philadelphia-based nonprofit, has provided a neutral forum for the exchange of divergent perspectives through our domestic and international programs. We engage experts in identifying emerging economic, social, political issues that are vital to the interdependent global community. If this is your first GIC event, we welcome you. If you're interested in learning about GIC membership, or if you would like to learn about sponsorship opportunities for this important series, you can contact the GIC at the following email address. It's info, I-N-F-O, info@interdependence.org. Now, a few housekeeping items before we get started. First of all, today's event is going to be recorded and it will be posted on the GIC website. During her presentation, Mei Hu is going to be speaking without slides, so don't feel like you're missing the slides. There won't be any available for Mei. And for Michael Drury, he will have slides. Those of you dialing in now live, you'll see the slides come up on screen. If you would like to access those slides after the call, they will be posted to the GIC website, and that's at www.interdependence.org. We'll save some time at the end for some Q&A. In order to ask a question from the GoToWebinar screen, you'll see a dashboard to the right. There's a small tab on that dashboard called Questions. If you click on the Questions tab, you'll see a box where you can type in your question. That'll enter it into the queue and we'll try to get to your question promptly. So to kick off, this whole series is talking about global interdependence. And interdependence comes in both positive and negative forms. And we think one of the important things to study and to try to understand from this global pandemic are positive interdependencies that are going to become negative and negative interdependencies that may become positive. We're going to explore that theme in depth over the coming months. But one of the ways we want to explore that is by engaging you, the audience. And so we have a short survey for you today. We have 4 questions. These questions are going to pop up on the screen. What we'd like you to do is take 10 seconds for each question to review it, and then using your mouse or your cursor, move the mouse or the cursor over the answer that you'd like to select, hit the button. We'll tabulate all the responses and we'll present those at the end of our program today. So Colleen, if you could start with the questions, we can put those up. So first question, given that we're globally interdependent, in a couple of years' time, we'd like to know, do you think the world will be more interdependent or less interdependent? Okay. And now our second question. So there's a lot of innovations coming in the testing space, and we're going to hear about that today from Mei. Would you personally like to know if you are immune to coronavirus? Yes or no? Okay. Now our third question is going to be a little bit more focused on the economic side. So the pop quiz is, we've had a $25 per barrel drop in the price of crude oil. What's the impact that $25 drop will have on China's GDP in calendar year 2020? Great. And our fourth and last question. When do you personally expect social distancing and business activity in the United States to return to normal? Okay, that's great. So thank you all very much for participating. We'll tabulate the votes and we'll show the results here momentarily. But let's start off with the healthcare side of the equation. Mei Hu, who's joining us, is the co-founder and chief executive officer of United Neuroscience. She serves on the board of directors at United Biomedical, where she was previously the co-CEO. And while there, she helped launch one of the first endobody vaccines in the world. And she also successfully organized and led a spin out of 3 individual companies. Mei holds a BA from the University of Pennsylvania, a JD from Harvard Law School, and is a former McKinsey consultant to the pharmaceutical industry. She's a self-proclaimed recovering lawyer and consultant, and in her spare time, she's finding cures for some very important diseases, including some very innovative work on Alzheimer's and Parkinson's. Mei, your firm is an innovator in the discovery, development, and commercialization of immunotherapeutics and vaccines for infectious disease. And in fact, the parent company, United Biomedical, just recently announced last month that they were doing a very innovative test of an entire county in the state of Colorado testing for COVID-19. So I'm going to turn it over to you, and maybe you could talk a little bit about that testing and some of the other experiences you and your firm have had during this pandemic. Over to you. And maybe 1 second, we need to get your audio on, please. Okay. So we're still having some audio problems, I believe. Colleen, can you just check the audio very quickly?
Yes.
There we go.
How's that?
There we go.
Okay.
That's good. Thank you.
Awesome. So I'm actually, so let me give you a little bit of context. I think one of the reasons why I was invited to speak today was less about my work with United Neuroscience and Alzheimer's, but more about what we're doing on the front lines with COVID-19. So our parent company, United Biomedical, has been around for over 30 years. It's actually probably one of the oldest biotech companies you've never heard about, but we cut our teeth in diagnostics. So our chief scientific officer, Changyi Wang, actually developed the first ever peptide-based diagnostic kit. And back then it was for HCV, HIV. And since then, we've been manufacturing, developing, and then distributing through global worldwide partners, such as bioMérieux, Organotechnica, these diagnostic kits. And they've been on the market for over 25 years. So what's been happening is that since I'd say 80% of our
So Mei, I'm afraid we've lost your audio again. I'm sorry to interrupt you. Okay, so I think what we'll do, if it's all right with you, why don't we go to Michael first? I'm going to have Colleen connect with you, and we'll try to get your audio straightened out here. And I apologize to the audience for the delay. So Colleen, can you bring Michael back up, and we'll start with the economics piece, and then we'll try to get Mei back. All right, and Michael, can you hear okay?
Yes, I can.
Excellent, thank you. So Michael Drury is the chief economist for McVean Trading and Investments based in Memphis, Tennessee. I should say he is also the chair emeritus of the Global Interdependence Center. Michael received his bachelor's degree in economics from Georgia Tech, and he did his graduate work at the University of Wisconsin in Madison. He began his career in New York City in 1982 and as a senior economist at A. Gary Schilling and Company. Michael assesses the macroeconomic developments around the world to help develop hedging strategies in the futures markets for interest rates, currencies, and industrial metals. And while Memphis is a very long way away from Beijing and Shanghai, Michael's extensive travels and contacts in China bring us a very unique perspective and insight on the Chinese economy. So Michael, I'll turn it over to you, and if you could give us an update on changes and developments you're seeing in the Chinese economy.
Absolutely. So the first thing to start with is that anybody who tells you that they know where the Chinese economy is right now is lying to you, because even the party doesn't know where the economy is right now. So we're all looking at as many high frequency indicators as we can to just get within a ballpark of where China is. And the reason is because China is likely to lead the economy out. If you could go to the next slide, please. So you can see this is going back to 2012, and basically ever since the great financial crisis, it's been credit coming out of China that's been the driver of the global economy, largely because China is the largest commodities consumer on the planet. So as it ramps up buying, it affects the emerging markets, it expands activity in the world. We've been through basically three cycles down in since the great financial crisis, down in 2012 with a rebound that was led by China, the red line. Then we went back in 2014, essentially on the Chinese corruption campaign, which slowed their economy. Again, they led the way out in 2016, leading the red line. And then they went in first with the trade war in 2018. And they tried to come out in early 2019, only to run into a tightening of the trade war with the United States, which fell. So they fell again. They tried twice more to come out, and finally, only with phase one did it look like they were coming out of recession about 6 months ago, and then COVID hit. Next slide, please. So the real question for China, for the world, is this a short, sharp shock? In this case, a shorter, sharper shock than it was for China in 2008. In 2008, China posted a weak quarter of nominal growth and one negative quarter of nominal growth. They never reported a negative quarter of real growth, but the Chinese, we know how they report real GDP statistics. But basically, they were in and out in 6 months because they put $4 trillion on a then $36 trillion, 4 trillion yuan on a 36 trillion yuan economy, 12% of GDP. Basically, what we're about to try now. And they came out very quickly and we're back to normal growth in 6 months. In this cycle, they went down sharply last month when they basically shut off their economy the same way everyone in the West is now doing. They reopened about 4 weeks ago, or attempted to reopen about 4 weeks ago. And the first report on the PMI was at 52, which is, expansion, but expansion from an unbelievably low level. They had reported negative 13.5% for industrial production last month. That's a month-on-month number. That's not an annualized number. Next slide, please. So the Chinese are pretty happy with where they are right now. These are some various stock market indicators. The blue and the black line at the bottom are the MSCI World and emerging markets. Above that are two kind of middle of the road Chinese indicators, MCSI China and an ETF from Premia China, who I stole this chart from. And then kind of the CSI, or the tech companies in China, they're the red line. They're at about 0 compared to down sharply for the rest of the world. The next chart, please. So the CSI 300, which is the tech end of the Chinese economy, has been outperforming nicely. But if you go back, you can see that it was about performing the same as the MSCI World going into Lunar New Year. But when they shut down Wuhan just before Lunar New Year, it slipped. And then they kind of waffled sideways through the new year. When they said they were going to reopen in early February and they were unable to, the market crashed. And they dropped relative to the West, which was still doing well at that time. And then they recovered slowly again, and it's only when the West started to slide around February 20th that they started to pick up and widened a gap that got it almost as high as 30%. That was them basically staying at 0 and the rest of the world falling, not them outperforming by doing well. And now, as the rest of the world is starting to throw stimulus at their economies, you're closing that gap again. The next chart, please. So one of the things we use that's a strong indicator of where the Chinese think the Chinese economy is the yuan, which is declared to be a free-floating currency, but rarely behaves that way. If you go all the way back to when it was locked at 8.6 to the dollar before 2005, then Senator Schumer and some others were bashing the Chinese pretty heavily, and they finally let their currency appreciate. And it appreciated very rapidly over 05, 06, going into the great financial crisis. And they actually liked that. They realized during that period that a stronger currency allowed them to buy commodities more cheaply, and that it was a benefit to a mercantilist to be able to do that. When the great financial crisis hit, you can see that they got cautious. They froze the currency. They went sideways for almost 2 years. And then they started to allow the currency to strengthen again until you got the EU crisis. There was a slight setback. And then it rose to its peak in 2014 when the corruption campaign started and they inflicted a credit crunch on themselves that slowed the economy. 14 and 15, they kind of moved sideways. And then you have that abrupt, sharp drop, which was the one-day currency break. A lot of people thought that might have been a mistake. And clearly now, with hindsight, we can see that it was the beginning of an opening volley, which weakened their currency back to the great financial crisis levels as they fought off the credit crunch impact on their economy. When Trump got elected, they thought they had him figured out, and they started to allow the currency to appreciate again, figuring that with a business-oriented president in the United States, that China would be able to do great business. When he stopped talking about tax cuts in the United States and started talking about a trade war with China, that's when you get that oops, and they drop the currency all the way back down to the great financial crisis level again. During the trade war, they went below that, and that's kind of where we are now. They're hanging around at the bottom of the levels that you were during the trade war. They're not really moving the currency up or down very much, but given that they have a significant advantage on the rest of the world right now, you would think that if they were optimistic, they'd be expanding their currency or strengthening their currency, and that does not appear to be the case. The next chart, please. So one of the main things to consider when you're thinking about how to use China as an example for how the recovery is going to go is that the Chinese ran into COVID right on the cusp of the New Year's, which is the largest migration of people in the world. They shut down Wuhan literally the day before, the Friday before New Year started. By then, large numbers of people had already left because people start traveling 2 to 3 days before. So what happened was they moved literally hundreds of millions of people all over China, then closed the country, trapping 80, 100 million people out of place. And it took them much longer than expected to be able to bring those people back to the economies, to the locations where they would normally undertake business. Next chart, please. So this is data from WeBank, a large private bank in China right now. It's an online bank. The blue line is last year, 2019, and the red line is current. Normally during the shutdown week, the New Year's week, you would operate at about 50% of GDP. And this time they dropped down, they were about 30%. And then you would expect recovery about a week and a half to 2 weeks later. And what we get from this data is that they basically operated 4 weeks at about 50% less than normal. And then they recovered, and it looks to us like they'll be back to normal in about another week. So that's 5 weeks where they were operating at about 25% below normal. You do the math on that, and basically you lost 3¼ weeks during a 13-week quarter. So you lost 25% of economic activity. That's quarter on quarter. You annualize that, and you've got a negative 68%. The good news is that if you get back to just even in the second quarter, you go from that negative 25 to a plus 33. Because if you go down to 75, you have to go back up to 100. It's a 33% gain. That annualizes to 218%. It just shows you that the numbers are nonsense at this level. All you can really do is guess whether you're within 5%, 10%, or 15% of what would have been normal. The Chinese tell you that anything that is government-oriented is within 5% of normal. The country is within 10% of normal. And anything that's private sector or trade-oriented is probably still at least 20% away from normal. Go to the next slide, please. So what are the Chinese going to do about this? Well, the United States, we know, just passed a huge tax package that adds up to about 10% of GDP. The Chinese aren't doing anything like that scale. They're going to do about 3, maybe 4% of GDP, which is kind of what you do to get out of a normal recession. The United States did 6% in 2008. The Chinese did 12% in 2008. The Chinese did 6% in 2018. They're only doing 3 to 4% now. Part of the reason is that they've done so much stimulus over the last 4 cycles, 2008, 12, 16, and 18, that they just don't really have much left in the tank in terms of credit expansion. Their deficit's running at 2.8% of GDP. There's talk that they'll let it expand to 3.5%. It hasn't been over 3% in decades. They'll allow $1 trillion in additional provincial loans, which would be roughly equal to 1% of GDP. Their total expected for this year was 1.8 trillion. In January, February, March, they spent 1.6 of the 1.8 trillion. So that's why we expect another trillion to be thrown on. They've been reducing their reserve requirement. They did it about 15 days ago. We expect them to do it again. Each 1% that they reduce the reserve requirement generates about 1.1 trillion won in lending power, or about 1.1% of GDP. So if you add up those 3 items, you get about 3% of GDP. And then they've been lowering interest rates. They did 20 basis points just this week. They've done a couple of other 5 basis point moves. They're down to 2%. We expect them to gradually keep grinding rates lower. Ultimately, they'll probably end up at 0 like everyone else. But the bottom line is they're going to do 3 to 4% of GDP while everybody else is doing much more. The World Bank estimates that their growth could be between 0.1 is the bear case and 2.3 is the bull case. I got to tell you, for a bull and a bear, that's like 1 standard deviation. That's not 2 standard deviations, because the results could be a lot wider than that. if you assume that they went down 25% in the first quarter, and they were even flat for the rest of the year, they'd end up the year down 6%. Given that they normally expect to grow 6%, if they ended the year as 0, that would be a win from my point of view. And the middle case here for the World Bank is 1.2%. So I think that Chinese would be more than happy with that. Their real goal is not growth in 2020. It's strong growth in 2021, which is the centenary year of the party being founded. And they want to use that as a year in which they go around telling people how great socialism with Chinese characteristics is and how developing countries should consider that rather than capitalism as the model on which to build their economy. So this year may not go so well for the Chinese, but they're going to save the stimulus to drive growth into next year. Let's look at some of the sectors. The most important sector you need to develop is energy. The next chart, please. Energy in China still largely means coal. Coal demand's running around 60 million tons. Normally it'd be 75. So you're at about 80% for power generation right now. The manufacturing sector is the main consumer of power in China. So that gives us an indication that even though the factories may be open, even 100% of the factories being open, they're still not operating anywhere near 100% capacity. The next chart, please. So these are some pictures of China looking at NO2 levels, nitrous oxide, to see how much economic activity there is. You can see the first one, January 19th. That was before the New Year shutdown. The next one would have been the week just the week before the shutdown, and New Year's would have been on January 26th, that Saturday. So you can see that's kind of normal activity slowing down in China. Then you just go blue for basically 4 or 5 weeks. And only on March 8th do you see a little bit of orange and some more of the white coming back in, indicating that they were picking back up. So this goes along with the coal chart to tell you that even as recently as 4 weeks ago, China was still operating at a very low level of activity. Next chart, please. So those pictures are only available with a 2-week lag. This is air pollution in China or in the world right now. You can see all of Europe is yellow and green, very few red flags indicating that that you've got factories open. India, which normally would be very, very red at this point, is yellow because their economy is shut down. Malaysia, Indonesia, Japan, Korea are all yellow because their economies are operating very slowly. It's only in China that you see the red and purple flags indicating that that they're having pollution issues again because their factories are back up and operating. The next chart, please. So the auto industry is one that the Chinese were very interested in getting back moving, and one that had a deep, deep decline. If you look at the beginning of 2019, seasonally adjusted, it looked like they had been picking up, but that faded at the end of the year, and now it's collapsed. The next chart, please. Just to show you how fast they wanted to reopen autos, this is a picture of Dongfeng Honda on March 15th, which was 2 weeks before they ended the quarantine of Wuhan, and they already had factory workers back doing the 6-foot separation. Next chart, please. It looks to us like on a daily rate basis, sales are back up to 50% of normal in China. That's not great, but it's better than flat. Next chart, please. The same thing is true of air traffic. China is the red line towards the bottom of the chart. You can see that they were at their worst back on February 17th. They're still down about 40%, but that's better than almost everybody in Europe who's basically shut down where they were. This shows the 3 to 4 week lag that you have between Europe and China. Next chart, please. So the strongest area of the Chinese economy is property, where because of lower interest rates and because credit's back in the economy, it's almost back to normal. This is why the Chinese won't release more credit into the economy. They know where it will go, and they don't want any more empty buildings being built. Next chart, please. So this is Ningbo, which is a container port. If you look at the top chart, which is back in February, you see you got down to only 35 ships coming in there. Normally that would be around 600, and that's where they are on March 25th. Next chart is similar. It's Shanghai, which is a container port rather than a bulk port. Ningbo is a bulk port, sorry. And you see the same pattern where they were terrible in the middle of February, and now at about 1,800 ships, they're back to normal. Next chart, please. Part of what's going to save China on the trade front, where they're going to have problems because their trade partners are now all shut down, is crude oil. And we estimate that the most recent $25 drop in oil saved China about $90 billion a year at an annual rate. So, I mean, that's not going to save the economy, but it's better than a sharp stick in the eye to save $90 billion in a roughly $14 trillion economy. Next chart, please. The other thing that's going to help on trade is that everyone else in the world is doing more stimulus than the Chinese. The US has done 10% of GDP. The Japanese are doing 11% of GDP. The EU has started with 4% of GDP. We expect that number to go up. Singapore is at 10% of GDP. Several others are around 4%. Next chart. So this is just quickly, these are some charts of Beijing, Shanghai, Guangzhou traffic just to show you how dead it was on the top chart and how it's come back. Well, you notice on the bottom that they're back close to normal on daily traffic, but on the weekend, not so much. Go to the next chart for Shanghai. You'll see the same pattern with a little bit better on the weekend, and then Guangzhou, the next one, the same pattern, but even a little bit better on the weekends. Then go to the next chart. So regionally in China, on Monday, so on a regular work day, you have about half the country now operating above normal, above 100%, because they're running factories faster and faster, trying to get people back to work, trying to make up for the shortfall. The four red lines off down the end, that's Taipei, Tokyo, Hong Kong, and Singapore, just to show you what the rest of Asia, which was also affected by COVID, how they're doing. None of them are nearly as dynamic as China is at this point. And then the final chart. The final chart is to look at the consumer. This is what weekend traffic looks like. It's running about 50%. The thing I find most interesting is that up at the top of the chart, you've got Shenyang and Changchun, which are far in the north, Chengdu and Chongqing, which are far in the west, far away from where the COVID problems were. But down at the bottom of the chart, you've got Beijing, Shanghai, Guangzhou, Shenzhen, Hong Kong, all of the largest, most densely populated cities in China. And there's still a great wariness about going out, as we would expect in New York City and as we expect in the recovery in Europe and in the United States. So that's my story, and I'm sticking to it. I'll be happy to answer questions when Bill says it's time.
Great. Michael, thank you very much for that. Very interesting to see all of the high frequency data that you and your firm are able to collect and help analyze. We do have a number of questions coming in regarding the Chinese economy, so let's hold those. Michael, please stick around. We'll bring you back on in a moment. And I think Mei is back online. So while we're pausing
Yes.
to get Mei.
Hi there.
Oh, you're okay. We've got your audio. Are you there?
Excellent.
There you are. Fantastic. Welcome back, Mei.
Thank you.
So you were starting a really riveting story about the COVID testing taking place in Colorado. So let me turn it back over to you. Thank you.
Yeah, so as I was listening to Michael talk, and I hope you guys can hear me, I was thinking, I come at COVID-19 from a very different perspective. We're at the front lines. Half of actually 80% of our team, our company's team, is in Taiwan and China. And that's why, you know, starting January, we saw it coming towards us, and we actually had the PTSD from SARS back in the early 2000s. And so I was thinking about talking about really what are we seeing every day on COVID-19, what we're doing about it, why we think testing is important, and also some of the coming challenges that we should expect in the next few weeks. So in terms of you know, what's happening around COVID-19, it's very difficult to make predictions, and it's very difficult. I mean, even from when Bill and I were talking maybe 2 weeks ago, I think what was in focus on that conversation versus what is in focus and what's happening now has changed. So this is really, every single day is a new day, and it's really game time decisions every day. So what it comes down to, and what I think that we can learn from the cities and the countries that have managed to contain the epidemic, at least for a while, like China, South Korea, Singapore, countries that have been able to flatten the curve, shall we say. What we see is that there's a common theme of testing, and the WHO says this, it's test, test, test. The truth is we don't have enough information, particularly in the US. You know, the US is a bit different in the way that the healthcare system is run. It's more spread out. So, you know, even though physically we're a similar size as China, our density is much different, and just the way of our lives are different. And so testing has taken some time to ramp up. But just like, you know, the WHO says, and now I think all other nations and public health officials have been messaging, we need more information. We need to test. Now, why do we need to test, and what are the different tests out there? I mean, I'm sure every day you see articles about it. So let me just break it down quite simply. There are two basic types of testing. One is called RT-PCR. Those are the nasal swabs that you see. You know, and what they do is they test for the actual viral matter in your body. So are you currently infected with the virus? These are, you know, nasal swabs or sometimes throat swabs. And they want to tell, do you have an active infection? Are you infectious to others? That is very important information, absolutely. Now, some of the drawbacks are these are not mass screening tools, okay? Even the most, like the rapid test that just came out this week from Abbott, yes, it only takes 15 minutes, but you can only do one at a time. So if you have for each machine, you're only talking about 4 tests an hour. So when you think about that and you explode it to a population of over 300 million, you can see that, you know, mass testing is very difficult. Not to mention, this is going to sound strange, but specimen collection with PCRs are difficult. They require trained people. You either don't go high enough, you don't swab rough enough. I mean, self-swabbing has a lot of variability. And also what we're finding is that with COVID-19, it tends to rest in the lungs more than SARS. And so sometimes, especially in early infection, someone may not be coughing up enough viral matter. All of that combines just to say that even though PCR is a very important test, there's high variability. So, I mean, there's reports that are almost 50% false negatives. So what's the other type of testing? And when we talk about testing debates, I want to be clear that it's not like one is better than the other necessarily. They have different uses, and in fact, they're very complementary. So in China, the actual standard clinical protocol for diagnosis is not just one test, but in fact, both tests. So the second test is called an antibody test. It's a blood test. And what that detects is, you know, whenever our body is exposed to something like the flu or, you know, SARS, COVID-19, you know, healthy immune systems will develop antibodies to it. So what the antibody blood test detects is, do you have those antibodies against COVID-19 in your bloodstream? Now, that means, were you exposed to COVID-19? So the antibody test can actually tell whether you're exposed. It can't tell whether you're actively infected or not, but when coupled with a PCR, it can actually tell, you know, if you're not infected, that means you've had COVID-19, you've recovered, and now you've developed antibodies, which confers a level of immunity to you. So I always say, you know, at first when people think of antibody tests, everyone's like very scared to get antibodies, but instead everyone should get a sticker. They should be like, congratulations, you've had COVID, you survived, you have antibodies, you're immune, feel, you know, much more comfortable going back out there. So why are these tests important? Well, one, if you can do something on a mass scale, okay, and antibody testing is on a mass scale. It's what we do to basically screen our blood supplies. It's the same type of test. What our company is developing is what we call an ELISA test. So this is meant for high throughput screening. There are other rapid tests that are out there as well, which are kind of like finger pricks, and those are more like the home pregnancy type test. But the idea is, why are these important? Well, because it gives us really good information at scale. So what we're doing in San Miguel County in Colorado is, a couple of weeks ago, we became the first ever program to actually test an entire county. So we wanted to see what is actually the outbreak prevalence. Everyone is kind of driven by rumors or speculation as to what, you know, the percentages might be, but you don't know until you actually test. So the idea is, we're doing a screening. It's about 7,500 people countywide, and we're doing it twice, 14 days apart. Now why twice? So antibody testing is one, easier to do at scale. So, you know, we're able to do, let's say, 2,000 samples in 2 days, whereas a PCR would take 100 samples, you know, 2 weeks kind of thing, at least a turnaround from a small town like ours. But what you do is you screen once, then everyone kind of goes into shelter in place, which everyone is anyway, and then you do it again. Now, if you're negative and negative, that means that you're clean. You've never been exposed to the virus, you're not infectious to others, but you need to be careful because you are still vulnerable to contracting and catching it. If you're negative first and you're positive afterwards, that means at some point during that 14-day period, you seroconverted, which means your body started developing antibodies. And that means that you should be tested with PCR to see if you're still actively infectious. And then the last one is just if you're positive. Now you should still, you know, confirm with a PCR to see if you're actively infectious, but the idea is, all of a sudden you've screened and you've identified who is vulnerable still, but is clean. So, you know, isn't going to be a danger to others, who has developed immunity and is clean. So both of those should, you know, be going out as quickly as possible back into what I would call the new normal. And then you've isolated the small percentage that are still actively infected. So rather than turning a whole town upside down into self-isolation, what you've done is you've grouped people into different, you know, buckets based on their status, and just isolated the ones that need to be isolated. So that's what we're doing in San Miguel County. Now, where has the testing, you know, conversation, you know, trended in the last couple of weeks? Well, I think the government's done a very good job in terms of allowing more and more and approving more and more PCR tests. Those are the nasal swab tests from getting onto the market. So, you know, we're getting up, we're ramping up. One of the biggest challenges is actually lab capacity issues. So they take a long time to run. And so labs all around the country are being swamped with this type of work because they're just not used to this volume. In terms of antibody testing, we're actually expanding. And I mean we in our company, but also other antibody testers. And what we're targeting now is, you know, it's almost like a order of priority. The first would be, you know, first responders, folks that are out there day in, day out, like getting exposed to the virus, particularly healthcare workers, first responders, the police departments, fire departments. These are people that we need to keep out there because, you know, what's going to happen if you don't have policemen and nurses out there and they're out sick? So, you know, rather than PCR test everyone, the idea is go out and mass screen people for antibodies and identify who can come back to work, right? Who has recovered, and those people who have recovered and developed immunity, put them, you know, at the front lines of the COVID-19 patients. But what you do is you give people more comfort and safely get them back out. The second tier, the second group, I'd say, are, you know, folks that keep the rest of our lives running right now. People part of the gig economy, people in call centers, in fulfillment centers, ones that have to work closely to each other. So they are exposing themselves. They're not directly to exposing themselves to COVID-19 patients, but you know, it's hard to work with the social distancing in those centers. So, you know, screening them. And then the third, you know, group would be just outbreak areas, areas that we know have high incidents. So Bellevue, Washington would be the first, the Bay Area, New York City, areas of New York State. These are things that, you can't do nationwide overnight, but what we're really trying to do is, target the places that need it the most and getting people back to work to keep everything else running. Let's see. So what are some of the bottlenecks or the constraints on this? I don't know how many of you guys out there run companies where people still have to show up, but it's difficult to be on the front lines. We have a facility out in New York, and that's actually where we manufacture a lot of our tests. And everyone is chipping in. I mean, people are driving in, that work at our other companies just to lend a hand. And, one of the challenges is when you're in shelter in place and when you're in an outbreak area, people lose childcare. Folks have to work from home who are immunocompromised, who are higher at risk, whether they have an underlying condition or age is just a necessary, risk factor. Beyond childcare, you have the fact that if you're symptomatic, right, it's no longer like if you have symptoms, you need to stay home, and you just stay home for a while. And so, a friend of ours had a line, and there was supposed to be 20 people, and 4 showed up. And so it's like a wartime operation right now. I think Michael mentioned some, China is rearing back up. It's funny because 2 months ago no one was answering the phone calls, and now China is just calling every day. But one of the challenges is still supply chain. So we're sourcing everything outside of China right now because air freight is maybe down significantly from China. So and actually we had I heard of a story the other day, actually just yesterday, where a company was about to ship a huge batch of diagnostics out from China, and China just prohibited it for 14 days. So they basically redeployed, and now you can't get it out. You're not allowed to ship out. And so there's a lot of disruptive issues that compound the challenges that you have to deal with anyway to scale up and help provide in this time of crisis. I think even for antibody testing, lab capacity is an issue. This is thankfully the PCR tests that I talking about, the nasal swabs and the blood tests, they work off of different equipment, so they can be parallel processes. But you're talking about requiring people to run those. And so we had a couple labs in major cities that we would work with, and now they have shelter in place rules. And so, if you're not an essential worker, you're not supposed to come into work. And even if you are an essential worker, you have to deal with other things like, childcare and how do you take care of the rest of your family? So, that's a long-winded way of just saying, I think testing is still important on COVID-19. It's very important. We're getting more tests out there. The FDA has been, frankly, quite good. I mean, you have to applaud them. They're recognizing the urgency in testing and are really doing their best. You write them and they're responding in the middle of the night. I think there's a lot of finger pointing, but at this point, I think we don't have time to point fingers. We just need to figure out how to move forward and work together to get out of this. So I see Bill back on, so I think my time's up. But sorry for that ramble. This is just our first frontline experience with what we're seeing with COVID-19, what we're trying to do, what we see others doing, and hopefully how we can work together to get ourselves out of this.
Oh, Mei, that's great. Thank you. Let me ask if you could just speak to your company's experience back in January, February. Were you involved in China with testing, and what was your involvement then?
Yeah, so like I said, the majority of our company is actually in China and Taiwan, and we had responded to the SARS epidemic as well. So when we saw COVID-19 coming about, we got reports from actually our collaborators in Wuhan, Beijing, and so we quickly developed a diagnostic to deploy. So we sent about 500 kits over, which is about 100,000 tests to be rolled out in Beijing, Shanghai, Wuhan, Hubei, and Taiwan. And from there, we got a lot of validation data as well, which kind of gave us a head start in terms of knowing and how to produce in the US. So now they're facing a different problem. So the biggest problem they're facing is it used to be that everyone closed their borders to them, and now they're trying to close their borders, because when you look at China and Shanghai, it's actually relatively clean, but a vast majority of their new infections are from returnees. And so I think that China's actually closed their border to the US right now. It's not even self-quarantine. It's no, you can't get a flight back in. So there's a completely different challenge that they're facing. I know for Taiwan, for instance, it was something like 52 new cases, something high 40s were from returnees from abroad, from expats. So it's not ending. And the last thing we want to do is go on this merry-go-round where we just keep filtering each other. So that's what we see over there.
Great, very insightful. Thank you for that. So we're going to turn now to the Q&A portion. And again, just a reminder, if you'd like to ask a question on the dashboard, on the GoToWebinar page, open up the tab titled Questions, type in your question, we'll get it in the queue. While we're waiting for some more questions to come in, Colleen, if I could ask you to put up the results of our little flash poll and the survey of our participants. So kind of interesting. It looks like about half of you said will be more independent. 51% said more independent going forward. 49% said less. So we've got a good market there. Buyers and sellers are equal. Let's go to the second question. Okay, so 96% of you would be very interested in knowing if you're immune. Excellent. Oh, this is interesting. So, Michael, correct me if I'm wrong. I think the answer to a $25 decline in the price of oil should have been about 0.7%. Is that right?
Correct.
Positive? Okay. We've got a couple of questions here talking about the oil movement today, so we'll get those in the queue.
Sure.
And then our fourth question. So it looks like 41% believe we're going to be less social distancing, and there was a comment that came in that, you know, what is normal? The definition of normal is going to change after all of this, which may be true, but looks like 41% in the July-August timeframe. So that's great. Thank you, everybody, for participating in that. So I'm going to divvy up the questions. We're going to do a little econ, a little healthcare. We'll try to go back and forth. Michael, I'm going to give you the first one because it's a broad question that really has to get into the data. And there were about 5 different questions. How do you trust the Chinese data? And then there were a couple of questions. How do you trust the US data? And this is dealing both with economic, maybe commentary and conjecture and what's coming out of the daily White House briefing, but also what's coming out of the collection of testing and the mortality rate and the like. And maybe that's a question for both of you. That, you know, your trust in the data that's out there in the public domain. So why don't we do the economic piece first, and then maybe
Sure.
you can address the healthcare piece.
So everybody knows of the historical problems with Chinese data, and so it's a Ronald Reagan trust but verify type thing. You know, I mean, so I've been going to China since 2005. I guess I've been there over 50 times now, and I've been in almost every major city in the country. A lot of those trips are just to verify, just to, you know, to see what's really happening on the ground, to go to factories, to talk to businessmen. So I guess I'm more trusting of Chinese data only because I'm aware of a lot of the flaws in it. and I can self-correct in my mind based on history where things are. But a lot of the data that I just showed you, I mean, part of the reason we use it is because the NO2 data, the TomTom traffic congestion data, the WeBank data, I mean, these are from private companies, so they're less likely to be manipulated by the government. We also do just a lot of social tests, you know, I mean, just to see, for instance, is China really done with COVID? So we know it happened in Wuhan, and we saw it happen in Iran, we saw it happen in Lombardy, we're seeing it now in Spain, we're seeing it in France, we're seeing it in New York. We're not seeing that level of problems at any hospital system that I'm aware of in China right now. So they haven't had a second Wuhan outbreak. Now, that doesn't mean there's none in the country. It just means the really, really scary stuff doesn't appear to be there. So that's kind of the way I look at it. And everything that we hear from expats, from people on the ground there, is exactly what Mei's saying, is that the real fear from the Chinese is people coming in. And it's really hard to get in, and if you get in, you're quarantined for 14 days. And in a hotel, not self-quarantine. They basically lock you up for 14 days. I don't know if Mei's got a comment on that.
So actually, an interesting thing about the hospitals, you saw those pictures of all those mass hospitals going out, and the reason why they were really doing the hospitals was to quarantine folks, as opposed to, you know, they didn't have that many ventilators. It was just they wanted to make sure that those folks were quarantined as opposed to self-quarantine. That's why they wanted to keep the beds. You know, in terms of data, I know there's a lot of talk about how much data, how much you can trust this data or that data. Maybe I'm a little trusting, but I don't think anyone's purposely trying to manipulate the data. I think if anything, they just don't have the data themselves. I mean, I don't think, it's hard to know what the actual prevalence is here when we don't have enough testing to find out. I think there's a lot of modeling that goes on. In terms of, so let me take it, in terms of the Chinese, I think they were actually much more transparent than they were with SARS. And especially now, and as you know, the crisis was unfolding, I'm not sure what any motive would be to really not share that data. Now, there's some decisions not to test in some ways over there, or there's other decisions to characterize what is a confirmed case. So I think, you know, Chinese only recently have decided that they're going to count asymptomatic patients who test positive as a case. So those are tweaks in data, but it's nothing like, you know, it's not like a conspiracy to not share it. That's at least my opinion. And in terms of the US, I think, I definitely think it's underreported, right? I mean, it just has to be underreported if you just look at the raw numbers. But I don't think that's intentional or anything. It's really, everyone is pushed to the limits, and they're doing the best they can, and the data is coming out as fast as they can. So in some ways, I just say, like, give everyone a little break and understand that we're all under a lot of pressure, and we're doing the best to share the data real time.
Okay, thank you for that. There are a number of questions here about supply chains, and Mei, you touched on it just briefly. I'm going to ask both of you. Mei, you from a healthcare supply chain standpoint, and Michael, you from other economic interests. What would you say the top 3 areas of problems are for supply chains gumming up between China and the US? And Michael, you want to go first?
Sure. You know, I mean, let's look at the ventilator question, because that's a real example of how difficult it is to do these things. Everybody wants more ventilators. There is no country that makes ventilators. Some of the parts are made in China, some of the parts are made in Germany, some of the parts are made in the United States. You know, it's a huge supply chain, and there are different companies which are the assemblers or the bringers together of all these things. And you know, and what's true of ventilators is true of automobiles, it's true of air conditioners, it's true of, you know, almost everything that's manufactured in the world today has very intricate supply chains, even stuff between the United States and Mexico. It can go back and forth across the border up to 50 times in the process of manufacturing. Supply chains are complex because we had a fully open global economy up until 4 weeks ago. And that's what we're dealing with now, is that all the assumptions you made about how easy it would be to get things back and forth are probably permanently changed, and there's going to be a cost associated with having to deal with that.
Okay, May.
So I can just talk from the healthcare perspective, but I agree with Michael. It is very complicated, right? There's no one answer. I think, to be honest, I was more concerned about supply chain for our own safety maybe 6 weeks ago, because China produces, over 90% of antibiotics, over 90% of, drug API. If they shut down, we only have a 2-month supply, and then we're out. Thankfully, they're back up and running, and now the irony is it's now Western Europe that's having supply chain issues. So, for instance, if we're supposed to, we're ramping up manufacturing, and we need equipment from Germany, something that's usually a 2 to 4 week lead time could be a 6 to 8 week lead time, because they're operating at a different scale. People need to be 6 feet apart in the plant, and so it's just slower. So instead, what you're trying to do is you're trying to find alternative supply chains that don't require air freight, that can be local. But that's just for our business. I think worldwide, you're going to see medical supplies are probably going to be the first strain, from ventilators to masks to diagnostic kits. And I think that it's going to be, it's going to be troubling from China, particularly because the air freight is down so much. And then secondary from Western Europe, Italy is a massive supplier of drug API as well. So it's going to be spotty, and I think everyone's going to be affected. So I think we need to keep manufacturing up in the US, which is even more critical than ever.
Great. So maybe I'm going to hit you with 3 questions. We'll try to lump these together, if I may. There's a question here about where you think the actual mortality rate for COVID-19 is going to land. Yep. Where will it end up? There's a question if does exposure to the virus create future immunity? And then there's a question of what's happening on the vaccine front. Do you mind taking those?
Yeah, no, I'll take them all. So I know enough to say that I can't make a prediction because things are way too widespread, but I can give you what I think at the moment. The mortality rate is a very interesting number because it has 2 numbers that are actually, one is the testing, right? Well, one is the denominator, and it's how many people are actually infected, and that's something that we don't know, right? So I think it's actually much higher than we think it is. And thus, I would say that the actual mortality rate would probably be much lower than is reported, in terms of like 3.8, 3.2%. The challenge is, and the reason why we can't just take mortality as is like a 3% or 1% or is as complicated as the flu, is that it's not the flu. And really where the mortality rate is going to come from is the overburden on the healthcare system. So the reason COVID-19 is different is that if you have the flu, it takes about 2 weeks to recover. If you have COVID-19, the average time, at least what we saw in China, was about 4 weeks, okay? And you're talking about heavy breathing troubles that require, almost 20% require hospitalization. And of those, I think almost 50% or 25 to 50% require some sort of ventilator or intubation. Most hospital systems are built on 65 to 80% base capacity. So you don't have much room for surge capacity. That's where the mortality comes from. Every time you go above surge capacity, you're talking about an incremental 5% mortality rate. So it's not actually a mortality rate that says, hey, if I get it, it's so devastating, that I'm going to die like in SARS or Ebola. It's more, you're going to have a knock-on effect with an overburdened healthcare system, and that's going to contribute to the mortality. So other people who would, normally die are going to die faster because they can't get medical care. So I just say that mortality rate because it's difficult because it's conflated by multiple issues. The second one, what was the one before the vaccine?
If you catch it, will you become immune?
Okay, we hope so. We don't know, and no one knows. If they tell you they know, that it's only been around for 3 months, so who can predict whether you're going to be immune to it 1 year later? In general, though, if you're exposed to something and you develop antibodies to it, so long as it doesn't mutate that much, you've essentially developed, some short-term immunity. So I would imagine at least 6 months to a year. That's just science based on what we know of other infectious diseases. We could be wrong, and this could be faster mutating. It doesn't seem like it. So, I'd be safe. I personally think that, if you've developed antibodies and they seem neutralizing, that you have some immunity. So at the worst case, if you get it again, it'll be much milder. Now, on the vaccine front, it's very interesting because there are lots of companies in the race. And again, it's unprecedented. The FDA is doing unprecedented things because of this emergency. So even though traditional vaccine programs, you would have to show some sort of disease incidence difference between the vaccinated and placebo, there are possibilities that a vaccine could actually get approved even faster than that. So all they would have to see is that the vaccine allows the body to make antibodies that neutralize the virus. And based on the detection of those antibodies, it would get approved and be used in mass. And essentially it would be like Jonas Salk, where you're testing, masses, and that's your test. That's your efficacy test. So you're not, testing for efficacy and then rolling it out. You're rolling it out to see if it's efficacious. So I know Tony Fauci always says 12 to 18 months. I'm sure he's right, and I never argue with him, but I think that it'll be deployed in mass faster than that if we find something that's safe. So, and we at UBI are also working on a vaccine that we hope to get into the clinic in about early summer. So, this is the bookend, right? And I didn't talk about this. Sorry to take more time, but the first first beginning of the pandemic is detect, contain, right? And then the second is essentially, well, the first is detect, the second is contain, the third is how do you reintegrate to a new normal? It's not something that we've talked about, right? There are people that are without revenue for 2 to 3 months now. How are they going to get back in? What is the new normal going to look like? And then the fourth is how do you prevent it from happening again? So I think what we're doing at UBI is trying to hit those 2 bookends.
Great, thank you for that. Yeah, I think the whole question about what is the new normal, that's going to be another call. May, I hope you and Michael will both come back to have that conversation. Let me wrap up with 2 last questions, one to each of you. Michael, there are a couple of questions in here about the US dollar as the world's reserve currency. Do you think that anything happening in China or the impact of the pandemic does anything to loosen up the US dollar's position?
I don't, the dollar is so dominant right now that I don't see anything specific from the virus or the current behavior that would derail that. But the United States and the Western world, especially Europe and Japan, are all printing extraordinarily large amounts of money to work themselves out of this problem. China is not, and the emerging markets can't. So a lot of the concerns about emerging markets, debt, are going to be rebalanced after this because there's going to be as much debt in the first world as there is in the third world. So there is a reweighing, a rebalancing coming. I think this accelerates the time in which the yuan can become a global or at least a regionally important currency. But will you replace the dollar as a reserve currency? Not in the next 12 months. No, not in the foreseeable future.
Great, thank you. And May, I'm going to ask you to put on your old McKinsey hat as a consultant. And as you look at the healthcare industry in the United States, what are the transformational changes you think will come out of this, either at the micro level or even at the the policy level, or the regulatory level, I should say?
So I think from a policy, and I'll talk about that, you can see which countries have done well with this. And if this COVID-19 is here to stay, I think we're going to move more in that direction and kind of give up certain, I wouldn't call them freedoms, but certain expectations. So there's been talk, for instance, of serosurveillance, which is you get regularly tested and you see what your antibody titers are, and if you have immunity, and if you do, you walk around with a bracelet or a card. And that you have to do that in order to work in high-risk jobs, like at a restaurant or as a driver or, at a travel agency. That's just one example of what I would say is a new normal that is going to be evolving within health policy. That's a requirement to basically keep everyone safe. Whether it's the right thing to do or not, I don't know, but I can see definite changes like that. That will be considered as we try to, escape and emerge from this self-isolation or this crisis. So, yeah, that's all I got for now.
Okay.
I'm sorry, I'm blowing up here. I don't know how to turn this off.
No, that's fine. Well, listen, May and Michael, thank you both very much for a very insightful conversation. Great questions from the group. We very much appreciate it. We're not able to get to all the questions, so we'll do our best to try to respond to you directly. But if you did ask a question and we don't get back to you, please just email your question to the GIC at info@interdependence.org. We'll get an answer for you and get it back to you shortly. I appreciate everyone's time, everyone's attention. Thank you very much, and good afternoon.